Good evening, Mark Teran, your mortgage man since 1986. Tonight, we're going to talk about first-time buyer loans in Sacramento County. Let me share my screen. Okay, so one thing I often get asked by a lot of folks is, stuff about first-time buyer loans. They want to know what it is that you get. And so, kind of dispel the myth or the mystery for some folks, basically, the biggest challenge that first time buyers have is down payment. And therefore, the first time buyer programs, all of them that I know of, offer down some form of down payment assistance, period. You don't go to them for special interest rates or that type of thing. You're getting down payment assistance is what they offer. And there are a lot of them depending on the area that you may be in. And so Freddie Mac, a secondary market player, has created this tool. They just came out with it within, at least I heard about it within the last month, and it is relatively new. So it's called the Freddie Mac DPA1 Tool, and I have it right here. And most all of us in the lending industry will have access to this. If they haven't heard of it, they can certainly Google it if you're working with another loan officer. Just want to share with you real quick what I have access to. So I'm going to click on this and it's going to take us to this page. I might have to hit Control click. And then I've got to double check here and make sure you're seeing the proper screen that I want you to. Okay, so I need to do a new share. All right. Okay, so what that did, it took us over to this DPA1 tool. We're going to log in. And this is a really cool tool. So here in the top, it says location. So I'm going to type in Sacramento County, Sacramento, County, California. Let's click on that. And this is going to show me all of the down payment assistance products that are available here um, in this area. So you can see it starts off with the GSFA Platinum, and then it goes on to County Assist to Own, Platinum Select, which I covered in a video last week, Golden Opportunities. So I'll one by one be doing videos on these so you can find out what they're about. Here's one by the city of Sacramento. It's called the Permanent Local Housing Allocation, PLHA. Let me click on that. I just want you to see what this does. It goes over eligibility requirements for your loan officer. It goes over program features. And down here at the bottom, it even gives us the provider's website. And so I clicked on here earlier, and for right now, they are out of funds. But there are so many different programs that, as you can see, this is just in this one select area. It can kind of be overwhelming. And a lot of times, as a loan consultant, depending on the person's qualifications, we'll research these different products and present. I happen to know because, and most loan officers will, that have been doing these, kind of the basics. And so we know like this one is going to have an income limit that's fairly restrictive. If you have, fairly decent income, I already know you're not going to qualify for it. I'm not going to bore you with going over it with you. Here's one in the city of Elk Grove, same thing. They've got some restrictions and qualifications to them that don't meet a lot of folks. But I just wanted to share with you some of the research that goes on behind the scenes when your loan officer is talking with you. A lot of us will research these things and find the products that actually fit your qualifications. Let me go back to my original screen share. And And here we go. All right. So here I'm showing you that, we have this tool. The most popular programs right now that the majority of people fit into are the Golden State Finance Authority products, which I've been covering in my videos and will continue to cover, and also the CalHFA, California Housing Finance Agency products, and the very popular one that's coming up, which is the Dream for All Shared Appreciation Loan Program, which I covered a couple weeks ago in a video. If you have any questions about any of these, please reach out to me. My cell number is 916-768-6530, and my email, mark.teran@apmortgage.com. Be more than happy to help you. Tonight, I'm going to go over the basics of the California Housing Finance Agency. So let me share that screen with you. And we will discuss that product. Okay. And I picked this one because it's definitely one of the most popular products, in my opinion, because their rates are competitive. The qualifications are not overly restrictive, and it allows for a lot of people to be able to take advantage of this program if they're a first-time buyer. This is a first-time buyer product. So, a first-time buyer is defined as someone, sorry about that, who has not owned and lived in their own home or one owned by a spouse during the past 3 years. And this product does require you to take an education course, which can be done online, costs $99. The required certificate from that course is good for a full year. And so if it's something you wind up being interested in, we can get you the link to do that. All right. It's an owner-occupied transaction. All the borrowers must occupy as their primary residence within 60 days of closing. And non-occupant co-borrowers and non-occupant co-signers are not allowed. Basically, this is for a single family, one unit residence, whether it's a house or a condo or a PUD. They'll even do manufactured homes, and they'll allow ADUs and granny units as long as they meet standard qualifications. All right. There are two versions of the CalHFA, and I put a note here that the California Dream for All, that I've done in a separate video because it's kind of a little more unique. And so I want to go over the basics of this program. And that's either it's a conventional based first loan with CalHFA or an FHA based first loan. And there are income limits. And in our area, Sacramento, Placer, and El Dorado County, you can't earn over 225,000. And I can tell you there are quite a few folks I come across that don't exceed that income limit threshold. And so they're good. And that's what I mean by they're fairly liberal and less restrictive in their qualifying criteria. Okay. The conventional back loan requires a 3% down payment. And for most folks, it's going to be a minimum 680 credit score. However, if your income is equal to or less than 80% of the area median income, which in that Placer, Sacramento, and El Dorado, that's 91,120. If you're at that amount and less, then you can utilize a 660 credit score and you'd still be good. Debt to income ratios, we're a little more flexible. If the credit score is 700 and greater, we can go all the way up to 50%. And if our credit score is less than 700, right, between 680 and 700 or 660 and 700, then 45% is the max debt to income ratio we can do. For the FHA-backed first products, they require a 3.5% down payment and a minimum 640 credit score. So a lot of times when you're dealing with a loan officer, we may start talking to you about a conventional loan or an FHA loan, depending on what your qualifications are. So if you've got a little bit lower credit, like 650, that's why we might say, hey, let's look at the FHA and start talking to you about that, because we know that's the type of program you're going to qualify for that's going to benefit you the most. So FHA, if someone's score is greater than 700, they'll go up to a 50% debt to income ratio. If their credit score is less than 700, they'll go to 45. And if we need to manually underwrite the loan for some reason, then it's a 43% debt to income ratio. Now, there are three different levels of assistance with the CALHFA. The first one is called the My Home Assistance, which is pretty much what we're going to do on all of them. We're going to start off with the first CALHFA loan, and then we're going to add in this My Home Assistance. And what that is, it's a 1% simple interest rate second loan on the property. And it's in the amount, if it's a conventional loan, it'll be 3% of the purchase price. If it's an FHLMC loan, it'll be 3.5%. Here's really cool thing. The payments are deferred for the life of the loan. So you don't have to make payments on it, but if you want to, you can. I mean, it's a small loan anyway, and it's at 1%. So I normally say, hey, let's get you into the house first and stop the home prices going up on you so we can get you in. That's one of the beauties of using these programs. And then I like to counsel my customers, so let's get you out of, your other, I'll call them bad debt, credit cards and that sort of thing. Let's make sure we've got like 6 months of savings so that we don't get ourselves into financial trouble. And then when we have extra money, we can talk about chipping away. In this case, we might chip away at that small second loan on the property and make that go away. But meanwhile, when you first get in, payments are deferred for the life of the loan, no payments required on it. It does come due and payable at the end of 30 years, if you happen to have it that long, or when you sell the property or, transfer it, or when you refinance and if CalHFA doesn't agree to subordinate. In some cases they do, but not always. All right, so that's the first level of assistance. There's two more levels of assistance with CalHFA. The second level is you get the My Home plus a 2% zip, which is 2% of the first mortgage loan amount as an additional assistance to help get you in for limited dollars. Now, the CalHFA first rate is a little bit higher on this second option. The third option is you get your My Home plus a 3%, 0% interest second, based on the mortgage amount for that third loan. And so that has the highest first interest rate on your CalHFA based loan of all of them, but it gives you the most assistance. And we'll look at that a little bit later in regards to what those interest rates look like. Sorry about switching screens on you. Let me get back to where we were. All right. So the ZIP loans, they're at 0% interest rate. They're third loans on the property. The payments are deferred for the life of the loan, and they're due and payable at the end of 30 years, or when you sell the property or transfer title, or if you refinance and the loan was not subordinated. Fairly liberal. Next screen. So here's the assistance breakdown by version, right? So on the conventional loan, you get the My Home Assistance, which is 3% of the purchase price as down payment assistance. And then the second level is My Home plus 2%, right? That's 2% assistance based on the loan amount. So you're almost getting nearly 5% of the purchase price going towards your down payment and closing costs. And then the third option is you're getting that 3% assistance based on a loan amount. So you're able to get in for very limited dollars. The FHA back loan is similar. It's just simply the My Home is 3.5% down payment assistance. because that's the down payment required on an FHA loan. And then the ZIP 2% and 3% of the loan amount is just like it is on the conventional, added on there, and there you go. And so here I've got the view the rates and how to read it. So I'm going to bring this up just so we can look and see what rates are running today for you and kind of show you the CalHFA screen. All right, I have to change my screen sharing so you can see what I'm looking at. So here we go. All right. So when we look at the CalHFA conventional, it's the second tier right here that has the My Home Assistance. The standard rate lock today is at 6 7/8. If you were at that median area income in our area, 91,120 and less, you would qualify for a low income rate of 6 5/8. And then the next rung up is they call it the Cal Plus conventional with 2% zero interest program. So that you're going to get the My Home Assistance, 3% of the purchase price, plus an extra 2% of the loan amount to help you get in for less money. But the rate is higher, and that's what I wanted to share with you. It goes from 6 7/8 up to 7.625. Again, if you had low income, then we would be at a 7.5 rate. And the next option where we've got the additional 3% on that third column there, you can see standard income, they don't have that product available today. It does change on a daily basis. And of course, the low income is at 8 1/8. If you are on the FHA backed loan, then the rate today is at 6.2625, 6 5/8 is how we would say it. And they don't have the additional 2% or 3% available currently on the FHA product. And to be honest with you, in today's higher interest rate environment relative to the home prices, in most cases, we're going to see if we can make it work with that lower 6.625 or 6.875 if we're going conventional. And on that, we're getting the down payment assistance towards the down payment. And then hopefully we might be able to negotiate with the seller to get some closing cost assistance, or you could get a gift from a family member, or some people wind up getting a loan against their 401k if they don't happen to have the funds themselves to manage to get in. But that gives you some ideas. Let me go back to my original screen share here. So here you've got the assistance broken down by version, and we just went over that. And that is basically it. So let me go back to my original screen with you. So as you can see, there's quite a bit to know about different first-time buyer loans. I want you to take away, they offer down payment assistance. They're there to help people get in. And I do see right now the interest rates, it is February 21st, 2024. The expectation is that we will see rates improve over this year. And I think it's going to become a good time for first-time buyers to get their ducks in a row and get out there probably by this summer and achieve an opportunity of a lifetime. And so if you have questions, if you want help, please reach out to me. I'm Mark Teran, your mortgage man since 1986. My cell is 916-768-6530. And my email address is mark.teran@apmortgage.com.